Hello guys, welcome back to the channel. If you are new to the channel, then hit the subscribe button to receive notifications whenever a new video is shared for your complete and all-round preparation for the upcoming ISC and the CBSE examination. There are loads of videos for your preparation. Do check it out. In this video, we are going to cover question 26b, which is a sum on retirement of a partner. Some important points to be learned while doing the sum. So without further ado, let's get started. Here we have question 26b, which is the OR question under question 26. There are three partners, Radhika, Ridhima, and Rupanshi, who are sharing profits and losses in the ratio 3 is to 5 is to 2. And on 31st March, their balance sheet is given. Ridhima is retiring, second partner here, and the following conditions have been given. We are required to prepare the revaluation account and partner's capital account on the retirement. And here we have, as you can see, the capital of the new firm is given. So we have adjustment of capital to be taken into consideration. Let's do it one by one from the beginning. Now, whenever you are doing any sum on either admission, retirement, death, you have to keep a few things ready and should check a few things. First thing, in case of retirement, is the old ratio, then check the new ratio, and then the gaining ratio, then the firm's goodwill and retiring partner's share of goodwill. These five things you should always check because these are important for your calculation and the entries that you will be passing. Old ratio is given here 3 is to 5 is to 2. About the new ratio, they have not mentioned anything. That means the continuing partners are retaining their existing ratio. So Radhika and Rupanshi will have the new share as 3 is to 2 itself. In that case, the gaining ratio also remains as 3 is to 2. So you can save some time by using this logic. If there is no change in PSR, then the gaining ratio remains equals to the old ratio between the continuing partners. Let's pick up one by one. We have sundry creditors, general reserve. General reserve, as per the rule, is distributed among the partners in their old PSR. So by general reserve, here we have the entry distributed 12,000, 20,000, and 8,000 among all the partners in the old ratio. The capital balances that we have here will be transferred to the capital account as by balance BD 3 lakh, 2 lakh, and 1 lakh. However, just keep one thing in mind, for this transfer entry, there is no mark allotted. However, that doesn't mean you shouldn't write, you have to still write it. Otherwise, your entire answer wouldn't tally. You might end up losing marks somewhere else. So you still have to write by balance BD entry here. So we'll pick up if there is any adjustment from the additional information. Goodwill of the firm to be valued at rupees 3 lakhs. So firm's goodwill is given. The retiring partner Ridhima's share of goodwill you have to calculate. Again, remember, question will not mention that. You have to remember that the retiring partner has to be given the share of goodwill, his or her share of goodwill. Okay, and for that journal entry is simple. Retiring partner's capital account will be credited and gaining partner's capital account will be debited. So 3 lakh, Ridhima's share is 5 by 10, that means half. That means 1 lakh 50,000 is Ridhima's share of goodwill, which Radhika and Rupanshi will give in the ratio 3 is to 2. That was their gaining ratio. In that case, 90,000 and 60,000 becomes the individual amount. That's why if you see here, by Radhika's capital account goodwill, by Rupanshi's capital account goodwill, the amount will be in Ridhima's column 90,000 and 60,000. And similarly to Ridhima's capital account, the entries will be under Radhika's and Rupanshi's account because their capital account is getting debited. You have to pass entries on both the sides and you have half mark allotted for each entry. So total 1 mark. Goodwill entry is done. Building was valued at 6 lakhs 20,000. We have building as 5 lakh. So 1 lakh 20,000 increase in the value of goodwill that will be credited to revaluation account. Again, remember, building account will be debited. So obviously revaluation account will be credited. That way it's coming here as by building account. If you have any confusion, do the journals in your mind. That will ease things out for you. There is no other adjustments for assets or liabilities. Straight away, this 1,20,000 becomes revaluation profit that will be distributed among all the partners in their old ratio. So 36,000, 60,000, and 24,000 become their PSR, becomes their share of profit, which is transferred to the capital account here by revaluation account 36,000, 60,000, and 24,000. Half mark for this transfer and half marks for this one here for calculation. Half mark for by building account is 1,20,000 entry. So in this case, revaluation account has just 1 mark allotted. Let's move on to the next one. Point number 3. Capital of the new firm was fixed at 5 lakh, which will be in the new profit sharing ratio of the partners. The necessary adjustments for this purpose were to be made by opening current account of the partners. This will be a straightforward calculation. If 5 lakh is the total capital of Radhika and Rupanshi going forward, this is going to be the closing capital. Then in the ratio 3 is to 2, that becomes 3 lakh and 2 lakh. Straight away, you can write here 2 balance CD, 3 lakh and 2 lakh. After doing this, your closing capital is done for the continuing partners. There is no other adjustment made. So any difference that comes for Radhika and Rupanshi will be transferred to the current account as mentioned in the question here. It's important to read the question. In some cases, they might say that this is adjusted via cash or bank. Accordingly, you have to make the necessary entry. So in this case, you can see here by Radhika's current account 42,000, the shortfall which Radhika has to adjust it via current account, and by Rupanshi's current account 1,28,000, that is the shortfall which is adjusted via her current account. Now let's have a look if there is anything which is left out. There is nothing else. Straight away now we can calculate Ridhima's balance, how much she is going to receive on her retirement, which is coming to 4,30,000. That will be transferred to Ridhima's loan account. Now, this is another important point to be noted. If the question hasn't mentioned that whether the retiring partner is paid immediately or what is done with that amount, in this case as well, question is silent about payment to Ridhima. Then by default, you have to transfer that to retiring partner's loan account. In this case, to Ridhima's loan account, 4,30,000. Half mark allotted for that. You can see the marking scheme. Hope this was helpful. If you have any questions, do let me know in the comments box below. I'll help you out. And do share with your friends so that they can also get benefited. Stay tuned to this channel for more such videos for your complete preparation. Thanks for watching.